Hello, can you hear me? Good evening. All right. Okay, so we're going to start. Others will join us later. So today, what we're going to be treating is top-down analysis. All right, top-down analysis. Okay, so we're practically done with what we are looking at this in this training. Okay, we're practically done with everything. All that's left is okay. All that's left is just a little bit of enhancement, not really enhancement, yeah, but just a little guide on how we can actually use them. All right, and then we'll just have one last thing concerning technical analysis, which is inducements. All right, so once we're done with inducement and mitigation, we'll practically be done with all the technical aspects of these teachings or this training. Practically be done with all the technical aspects of it. So, uh, yeah, that's basically it. I'm glad to be at this point right now because today I just like woke up. Okay, I wake up. I was actually watching a course and I was implementing and doing stuff like that, but I just fell asleep and I woke up around 7:45. I didn't want to do this class, but almost we're almost at the end. No need to start slacking, so I just had to turn up and get this thing done. All right, so yeah, we're almost done. So that's just the main thing I want to pass across. So, top-down analysis. Top-down analysis is basically what we did yesterday. Okay, so what we did with all those currency pairs that we checked out yesterday. So, basically moving from the higher time frame and transposing it to the lower time frame. So, now what I want to give you guys today is just uh, the simple model. All right, the simple method that you use to uh, do your top-down analysis. Okay, so the simple model for top-down analysis, right? Simple model for top-down analysis. I think today's what? I think today's day 14. All right, so day 14, and we have top-down analysis today. Right, so this means, this means to pick important reference points on the higher time frames and relating them to the lower time frames. So this is just basically what technical analysis is. Okay, so this is important. This is important because higher time frame, higher time frame of reference points have a greater influence influence on price action on price than lower than reference points on lower time frames, right? The reference points on lower time frames. So yeah, because So you don't want to be trapped in an uptrend that is actually a downtrend on a higher time frame. Okay, so that's why we do top-down analysis, right? So that you can know what the direction of the market is basically. So that you can know what direction of the market is basically. All right, so that's the reason why we do top-down analysis. Okay, so um in your top-down analysis process, so there is a process to follow, process to follow. All right. So the first thing you do is um check the monthly the monthly and weekly bias. All right. So this the bias on the monthly and weekly are usually the same. All right, usually the same. All right. So basically, what you want to see is the biases on the monthly and weekly are usually the same. So um, what you want is that you want to using Bitcoin, like Bitcoin. Let me use gold for example. Something I've never used before. Let's just use that. Okay. But so let's just use gold. So we go to the monthly chart. Okay. So you have a strong uptrend. All right. We go to the weekly charts. You actually have um you actually have a strong uptrend as well. All right. So these two charts, you just want to see the main direction of that particular asset that you're looking at. Right. So that these two basically show you the long-term premise. The long-term premise. Okay. So that what is happening um on the big scale, all right, on the large scale, what is happening. So you want to see you you want to see a particular trend on these time frames, all right. So then you now go down to uh the daily charts, all right, the daily charts. You can just go to the daily chart without going to the monthly and weekly time frame, sha, because the daily chart is kind of like in the middle. Daily chart is like an intermediate chart, right? I can just go to the daily chart and look at what price action is doing. I can just trade within, let me say this range here. I can just do my trading within this range and not bother about whatever is happening on the large scale, because the large scale, honestly, it's very very far. All right, it takes very long time to play out. And even though some people trade the large scale, it depends on you actually. All right, depends on you. Some people trade from the daily chart. They get their entry from the daily chart and they wait for months. All right, so this is usually people that have a lot of money involved. They don't play around putting their money here and there every day or every week. They just wait. Place a few trades a year, okay, and wait till they play out. So trading is dynamic like that, and that's why many people love trading, because um you can basically choose your time, you can basically choose your hours, you can choose whatever time frame you want to trade, model your trading plan, your trading style around your own personal life. All right. So basically, what you want to do is that you want to go to the monthly, you want to go to the monthly charts. All right. And on the monthly chart, you can see that it is bullish. Okay. So our bias for the monthly chart, directional bias for the monthly chart is bullish. Okay. So and we go down to the weekly chart. Okay. Our directional bias for the weekly chart is bullish as well. All right. So on the daily chart, when you go down to the daily chart, what you want to see is what you usually see is that the trend on the daily chart is different from the trend on the weekly chart and the monthly chart. All right. So you usually find out you you usually find that the directional bias on this time frame is different than that of the monthly and weekly time frame, right? This is normal. This is normal. All right, this is normal uh, because if there is a trend on the monthly and weekly, the daily charts and 4 hour charts, 4 hour charts are usually going to show retracements, retracements of the um actually going to show retracement of the monthly and slash or weekly trend. Okay, so it's usually showing um so if the monthly and the weekly charts are showing bullishness, you would find you most likely find bearishness on the daily chart. All right, most likely find bearishness on the daily chart. Okay, so basically what you want to achieve is that you want to follow the trend on the daily chart. Okay, you want to follow the trend on the daily chart, but still look for important points on the weekly chart and the monthly chart. So let me say I am selling gold right now because it is in a bearish trend. All right, I want to go to the weekly chart. Okay, I want to go to the weekly chart and check where would gold if gold is currently in a bearish move, where are we going to stop? Okay, I can say this is my order block on the weekly chart, and I'll say that okay, at this point I will stop selling gold. At this point I will stop looking for opportunities to sell gold. At this point I'll stop looking for opportunities to sell gold on the daily chart. So I'll now go down to the daily chart and look at it. All right, so right now we are still on our way there. It's still quite far, right? It's still quite far. We also have an imbalance here. All right, so you want to look for important points. You want to look for important points in price. Looking at this area now, I can refine my order block to here, the two down candle here. All right, two down candle here, two down candle. I'll blend them together and use it as my order block. So, and there's also an imbalance in this area. So this area can be quite instrumental later on. So that's what I'll use as the point of worriness. All right. So you want to see where it would be risky for you to keep going on the downward trend. All right. So that's just basically it. So now you now go to your daily chart, look at it, and find uh, your targets. All right. So you find your long-term targets. So um, um, after getting the trend on the daily and um, checking important points on the weekly charts. do the following. The following, right? So um, I want this thing to move to. Okay, so that will now bring us to step. That will bring us to step three. All right, that will bring us to step three. Okay, so step three is that you want to. Step three is that you want to um find um institutional targets or find proper targets. Let me not say institutional. Find proper targets on the daily charts, on daily charts, because targets on the daily chart is where price will, will gravitate towards on lower time frames, right? On lower time frames. Let me accept this person, all right? So that is where price will gravitate towards on a lower time frame. So now, looking at this daily charts, looking at this daily charts, who can point out to me what will be our target and if there's any other important point looking at these charts, all right, without mincing words. What is the target and where are we coming from? Where might be an important point that we should mark on our charts? So yeah, can anybody tell me where our target is? Okay. Yeah. Mm. Yeah. Okay. Sell to where? Which low? This one. Okay. Exactly. So okay. All right. So yes, that's accurate because we are on a bearish trend. We want to um. Okay, Chris, you can mute yourself. Oh. We want to look at external liquidity as our target. So this low here is our external liquidity. All right. There's also an order block in here that can constitute a problem for you if you are selling this chart or if you are selling this move. All right. But since we are bearish, it might not really constitute a problem like that. But then once it hits the other block that is around here, it's supposed to have a small reaction. So we are also going to go to a lower time frame to mark the exact order block or sponsor candle or whatever is down here. All right. So we are going to go to a lower time frame to mark it. But just eyeballing this chart, we can see that this area is also a rejection block. All right. So I can see that my first liquidity target, all right, my first liquidity target is the bodies of this candle, all right, because once we cross the body of this candle, we are inside the rejection block. We're inside the rejection block, so we have to be careful. We have to be wary. So that means that if I'm selling this, if I'm selling this currency pair now, or this asset, this is gold, so it's not a currency pair. If I'm selling gold and I hit this area, I will take majority of my profits while I will not leave the rest to try and push below here. I'm definitely expecting, I don't like these lines, they're not straight. I'm definitely expecting price to bounce from here. Okay, so that place might be a problematic area for me as a trader. Okay, so this is my final target if I'm selling, but this is my initial target here. All right, so this initial target here, you find out that on the lower time frame, it might just be accurate as the other block, but I'm not sure. All right, so you can see that price came from here. So we want to just look at all the important points on the daily chart. So price closed in an imbalance, ran into a sponsor candle here, and is running lower now. So we'll be looking to take out external liquidity. But even if we don't take out the external liquidity, we'll take profit here. So that's our plan, because this thing can come in here and be bullish. All right. So you have to take some profit here. Okay. So if you have a wick, the bodies of the candle can act as liquidity. The bodies of the candle can act as liquidity. I don't think I've told you this before. So the bodies of this candle can act as liquidity. So just before we encounter the rejection block, the bodies of the candle can act as liquidity, and we can run higher from there. All right. So um, now we are done with this step. All right. So find proper target on the daily chart, because the target on the daily chart is where price will gravitate towards on lower time frames. All right. So mark out key reference points. So the point of telling you guys this step by step process, all right? Point of telling you guys this step by step process is for you to go on your own and practice it. All right. So you don't need to memorize it, just do it over and over and over again. And once you do it over and over again, you start getting the hang of it, because it's actually very simple. This is what all traders do, and we do it naturally. So once you do it multiple times, you find out that it is not really something to memorize. It's just something that flows. All right. So now we are done with the daily chart. We have our final target here, initial target here. All right. We might just look into this area now. I might look into this area. Okay, we have looks looks to me that we have a mitigation block here. We have a mitigation block here. All right. So price looks to have touched it and we are running lower. All right. But also we can still see that we have a tiny imbalance there, but I doubt that that imbalance will be filled in, because this is a bearish trend. This is a bearish trend. Well, anyhow, this might be important, but most I feel like this is not really an important thing to look at. So I'll just go down to from here. You can jump down to a 1 hour chart, but for clarity's sake, we go to a 4 hour chart. But a 4 hour chart usually has the same thing as uh, a daily chart, right? Usually the same trend, all right? So you can basically jump down to a 1 hour time frame for 4 hours, but for the purpose of this class, you can just stick to this. So you can see that my mitigation block is actually there on a 4 hour chart. Okay, there's a mitigation block here on the 4 hour chart. It's clearly seen. All right. So yeah, you can now have a clearer view. All right. So you can see that this is my first liquidity target on the daily chart. You can see our sponsor candle there. You can see this red candle, the sponsor candle. Once price hits this sponsor candle, it might not go straight below it. All right. It might not go straight below it. It might hang around here a bit. So we want to be careful, okay, and take profits before we get here, because sponsor candle, they are very, very troublesome. Even if they don't change trend, they are going to cause a retracement or some kind of reaction. All right, so that's sponsor candle for you. That's sponsor candle for you. You can see this one here, for example. This one here, you can see when price touch it, you can see the reaction, very violent, very strong. So even if it doesn't change your trend, it will have some kind of influence on price, most likely. Okay, so yes, that's basically where we are in price. That's basically where we are. And on the 4 hour chart, the next point of liquidity, or the range. Okay, we want to look at what range are we in on this time frame. What range are we in? Okay, so the range is from here. Okay, the range is from here to here. All right, so range from here to here. All right, so we're very close to taking out this external liquidity and forming a new range. So looking inside here, we have a imbalance there. We have an imbalance there. So we want to check that out on the 1 hour charts. All right, so um, if you go down to the 4 hour chart, if you go down to the 4 hour charts, you usually find out you usually find that there isn't there isn't much difference much difference from the daily chart all right, there's not much difference from the daily chart. Hold this. There's not much difference from the daily chart. Okay, so if you go, all right, sorry, this is go. There's not much difference from the daily chart. All you um all you need to do here, all you need to do here is to refine your daily reference points, all right, reference points, and move to the hourly charts. That's the 1 hour chart, the hourly chart. All right. So you might also find you might also find important points that weren't obvious 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 on the daily. Mark those as well. Right. So yes, mark those as well. So looking at these 4 hour charts now, there's nothing that you can see that is okay. So the only difference I can see now is that we can now see the sponsor candle clearly, right? So you can now see the sponsor candle a little more clearly here. So instead of putting well, we can just leave this our target as this, right? And then we'll now mark out this sponsor candle as an area of trouble, all right, or an area of a little bit of um or of retracement, all right. So this place might be a tough area for us to get by, all right. So we can now mark this area as first target, all right. The target first target, all right. The first target, all right. And this one will adjust it. Let's be at the bottom, all right. So that will be our final target, okay. So yes, so this is basically formed the blueprint. So what we want to do is that we want to look for an opportunity now on a lower time frame to sell within this area, and then sell it down to one of these places. Okay. So now what you will do is that um you will look for um so you want to look for what you need to do now What you need to do now is to mark out potential entry points, potential entry. What was that? Potential entry on the 4 hour or 1 hour chart. Then go down to the 15 minutes and 5 minutes charts to find your entry. All right, so this is basically all you have to do. All right, so this is basically all you have to do. Okay, so what to do here now is that we now look at the price action. Okay, what is happening here at the right? So we have this low, we have this high. All right, so price has basically used a mitigation block here. This is the entire area of the mitigation block, but you can easily reduce it to this, but I won't do that. I won't like to do that because of this high over here. But let's just assume, but basically I've assumed that that place is over with. Okay, we have used that mitigation block already, so I would remove from my chart because not because it's not important, but because I want my chart to be clean. All right, so the next thing we want to see is what is happening here. We have a sharp imbalance here, all right, a sharp move in price. So what happens before a sharp move in price is a sponsor candle, sponsor candle. So we can mark the candle before the sharp move in price, all right, the big candle before the sharp move in price. So that candle is our important entry area on 4 hour chart, but it's too big. Okay, it's too big. So we have to go down to a lower time frame to look for entries or to make this zone smaller. Okay, so we go down to 15 minutes. Sorry, let's check the 1 hour first to see if we have anything different. Okay, so on the 1 hour chart, we have this. We have this. Nothing to clear. It doesn't clarify anything to me. So I'll go down to the 15 minutes. All right. So um, here we have consolidation. Just price meandering here. Right. Just moving slowly and annoyingly. Right. Look, this price movement looks very annoying. So basically, um, I'm looking at this candle as another block here. This candle is another block. So I can mark that candle as another block. So if price should hit this candle, I'll be looking for an entry on this time frame. All right. So I might place my stop loss here or above the other block. All right. But let's just check 5 minutes and see if we can change anything. And see if we can change anything. And see if we can change anything. Okay. So I just don't like these weeks. Okay. My God. I'm using the gold futures chart. Um, let's just see a plain gold chart. Okay, so this is cleaner. But I won't start again, Sha. You guys basically get the idea of what I'm trying to do in this case. All right. So this was our on the 15-minute time frame. We had an order block. Okay, so this is our order block on the 15-minute chart. Yeah. All right, 15-minute chart. Our order block on the 15-minute chart. So we'll be looking for entry signs there. Okay, signs of weakness. We might enter directly. Okay, we might enter directly as well. Okay, so this thing that we have here is what you can refer to as primary inducement. So this other block that I marked here is a very good area price. All right, so we'll learn more about primary inducements very soon. All right, so I'll just leave it here. I'll just leave it here. I don't think there can be more refinements done on the lower time frame. I can look at 1 minute chart and look for um to make my stop loss smaller. But sometimes if you overdo it, if you overdo this refinement process, okay, if you overdo it, you might miss a trade. Okay, it might never get to your tiny POI. All right. So if we are looking to we're looking to make this trade. So what we'll be doing is that this since we'll mark this, let me just make it clear. 15 minutes, 15, 15 minutes, 15 minutes, bearish order block. All right, 15 minutes bearish order block. So that's what this is. That's what this is right here. So we are going to sell it from there. So our plan is to sell it from there. Our stop loss above the other block a little bit, right? Stop loss above the other block, and we shift it to the right, all right? So to the right. So our daily target is now where we'll be looking to take profit. So if you go to a daily chart, go to a daily chart, okay. Our target um was here first of all below these bodies, below the bodies, all right. First target is just below the bodies, and our final target is at the week here for external liquidity. All right, for external liquidity. So we'll go down to our 15 minutes chart, and then we'll draw our targets to our daily targets. All right, so we'll transpose our targets to, so this is first target, final target. So we'll draw that down to your first target at least. All right, so but for this case, I will take it down to my final target because I already have it in my mind that I'm going to take partials there. So I might close if I open this trade with zero point 0.1 lot size. By the time we get to this point, I would remove like 0.05 or 0.06 lot size. So I'll take out 50 to 60% of the profit and leave the remaining to go down to the final target. So basically, this is our trade idea. All right, this is our trade idea. You can see that this is a G switch. This is a good trade because we have a very small stop loss and a bigger target. All right, and every other thing checks out previously in the trend. All right, so it doesn't look like at this point we're going to start rushing higher. It just looks as if the bearish trend is going to continue. Okay, so that's why this trade is fine. So that's how you do top-down analysis, going from the highest time frame to the lower time frame. So you go to the lower time frame, you start from the higher time frames to find your targets. Okay, to find your liquidity target. So this is your external liquidity here, right? External liquidity, which is our target on the higher time frames. So we find two targets on the higher time frames, and then we now find the tiny entry inside here, which is our 15 minutes order block. We find an order block on the 15-minute chart, 15 minutes order block inside here, which is where we're going to sell. All right, this is where we're going to sell. We're going to sell at the 15 minutes order block. So summary, all right, summary. You look for you look for targets and other important points important points on higher time frames, and look for entries on lower time frames. So this is the basic summary of everything you are doing in top-down analysis. So I will drop this PDF today, Sha, because this is important for you guys so that you can be practicing every day. Okay, so yes, so that's basically the summary. And let's ask questions at this juncture. Let's ask questions at this juncture before we close. Or let me check the outline. Imbalances. I think I'll stop here today so that's because I was already pretty tired before the class, and I don't know, somehow I have energy at this point. But let's not do too much today. Let's just take our questions and close the meeting. So yeah, do you have questions on the whole top down analysis breakdown? Do you have questions and issues?
Okay, my question is on this time frame that you are now.
Yeah,
I don't know what time frame this is.
this 2 hours.
2 hour time frame. Okay, just to the left where price consolidated a bit before starting that small uptrend. Is
This
there nothing there in price could cause a reaction?
this period
Maybe
this
to put the first TP around there.
okay,
Is there nothing
yes.
there that could make it react?
Yeah, there's a sponsor candle other block here. There's another block here. So we can draw it to the left. Okay, so what you can see is that price has reacted from it a little bit
Okay, already
already.
okay.
So you can see this violent move here. All right. So and price has already started coming very close to it again to take out this liquidity. So
So it's no longer valid.
yeah, I don't think it would cause more problems anymore. So that's why I ignored it because price has already used it already. So you grab. So it used it to induce liquidity. This internal liquidity inside here, this area. So internal liquidity induce it, react to this other block here, and we are returning to the trend. So that's why I removed or ignored it there. So yeah. Okay, no question. So what we want to do is that I want us to quickly go back to yesterday's analysis and see what price did. Okay, so basically where I showed you, you want to be monitoring your trades at all times. You want to be monitoring your trade at all times and try your best to stick to a few pairs. Okay, so that at least when you're beginning, okay, at least when you're beginning, try to stick to a few pairs because if you stick to a few pairs, you'll be noticing how price is playing out. So you'll be learning from that. You'll be learning from that. If you jump from this pair and you jump on that pair tomorrow, you will learn totally different thing about that pair and it's just going to be messed up. So we're going to go back to those three pairs we checked yesterday. All right. So based on Euro USD, we're expecting Euro USD to come down to this place, but it did not come down there. It's made a higher high. Yesterday it was around there, it made a higher high, but it doesn't mean you're going to shift your goalpost. You just remain patient. Okay, the trade is still valid. If Euro USD should still come down, you will still buy it. All right, so the trade is still valid, but once Euro USD should get up to this place, it's no longer valid. So if it gets up here without coming down here, then this trade is invalid. This buy trade is invalid. All right, so basically what we have is a consolidation throughout for the most part of today. All right, so today for the most part we just have consolidation, or let me just say small impulse retracement, but it looks as if it wants to drop here. Okay, because we have this impulse move and then we have another sharp retracement that comes deep down. So I think the upward movement is losing strength, especially as we have this area of like other block here. We have other blocks area in this place, so it might just be losing strength and coming down to this place. So we might see a potential trade opportunity playing out today. Okay, sorry, tomorrow. Tomorrow we might see it come down here and we might buy. All right, so that is that for Euro USD. we are still waiting for our entry. Nothing much here. Okay. Then we checked USD JPY. All right. So USD JPY, I was saying that I would be more comfortable if you come down to these areas. This thing is looking somehow, so I'm going to delete it. Let's not confuse ourselves. Okay. So basically, want to see. I'm just going to refine it to just one zone. Okay. So I'm just going to put it like this. All right. So yes, I told you I wanted to see you USDJPY come down to somewhere here before we bought it. Before we buy to these targets. Okay, before we buy to these targets. But what happened is that we came down. Like I said, I expected it to come down, but it came down, but it didn't really come down here. So it came down, then went higher. That's made a higher high now. Does this mean I will now start buying? Not really. It didn't show me what I wanted to see. It didn't show me what I wanted to see. So this trade for me is invalid until we come down here. If it comes down here, I will still buy it. But if it doesn't, if it keeps shooting higher, okay, that means it left me alone. It left me without doing what I wanted it to do. And if it doesn't do what I want it to do, then if I go ahead and obey it, I might be risking I might be risking myself. I may be putting myself in risk. All right. So what I expected was that either it bounce on this area and go higher, or it comes down to this area and go higher. But now it came down below this area, but did not really come down here. So this place I'm basically waiting to see if this is a reversal. Okay, so this thing might as well come down here. Okay, might as well come and take this low, which is my expectation. Okay, I expect that this is just a fake move. Might come down here, and which is when I wanna buy it. Which is when I wanna buy it. All right. Which is when I wanna buy it, or I'll be looking to buy hypothetically because I don't trade this, so I won't buy it actually. But you guys can buy it on a demo. So I expect it to come down here. But if it doesn't come down here, it's still fine. If it doesn't come down here, then it will likely run to our target without coming to show love. All right. So that is basically it for USD JPY. So just be looking at your trades as they are moving, okay, so that you'll be learning how price moves. You know that okay, if price does this, what should I expect? Should I shift my goalpost? If I saw a more convincing move, I might have bought it, but usually I don't really trade outside my parameters, outside my rules. But if I see that the market, assuming this has a high target, this target is not very far. Okay, I might, but basically, Sha, I won't really. This doesn't look convincing to me. Let me delete all these things. Let me delete all these things so that to be cleaner. I'll delete this as well. Okay, so I'll delete this as well. So my trading idea is just basically for it to come down here. If it doesn't come down here, no show. If it doesn't come down here, then I won't really trade it. So this is my trade idea here. Okay, so want it to come down to this area, close all these imbalances. At least minimum, you should close this vacuum block here. Minimum, okay. If you can close that, I will be willing to buy it. It doesn't have to come down here. It can just come inside here, and I'll be willing to buy it. But at least let it come down here, or let it touch the previous highs. So it has not even mitigated the previous highs. So it's quite a risky buy. Quite a risky buy if you buy it where it is now, simply because it's made a higher high. Okay, so for the rest of this week, Sha, we'll keep monitoring it and trying to see what is going on. Okay, so the last one is Euro CHF or Euro to Swiss franc. So yesterday we said this we are at all-time lows on the week on the monthly chart. We are at all-time lows. So we don't know whether the downtrend will continue or whether this is forming a new push higher. All right, so we might come down and take this low. If we take this low, we are going to be selling it. Okay, we'll look for a pullback to sell to. But instead of taking this with, or we can break above this zone. And if we break above this zone, that will mean that we are looking for a move to this daily objective, this daily mitigation block or whatever was here. I forgot it. I think it was a mitigation block on daily charts. All right. So what we can see is that it has had a violent move to the upside. All right. So it violated this block. All right. So if I sold there, I'll have been in trouble. All right. So if I sold there because we are bearish, I'll have been in trouble. All right. So I won't really say that I had uh, a sure I was sure that it was going to break above this zone. Just that as you trade, you start seeing some things that are not convincing to you. The- It might not be, it might not have anything to do with technical analysis, okay? Because based on technical analysis, it's still a perfect sell, or it was still a perfect sell. Comes back to a sponsor count, it's still a perfect sell, but just something that won't look right in your eyes, all right? So that's just how I saw it. I just felt like this zone might not hold, all right? So and it did not hold, so we are pushing higher right now. So our second scenario is playing out. So we push higher, look for a pullback, and buy to it. All right. So now all right, looking at this, I'll delete all the other ones that are no longer valid. All right. So all the other ones are no longer valid. So we delete all the other price points that are no longer valid. So all we can see here is that we have a sharp price move. So what we're looking for is who caused the sharp price move. So we want to buy. Our new setup is that we want to buy around here. Okay, so that's the last candle that preempted this run up. So once price gets down here, it has closed in this imbalance and to come down to mitigate this area. So we want to see price coming down to mitigate this area. If price should go below here, that means we are going south. This is the new range. You can see this price move is convincing. Compare this price move to USD JPY. Can see how this USD JPY move is weak. So I won't really say that the range has changed. Okay, I'll still say that this is the same range. So I won't say that this range has changed because of this higher high. It just looks like a trap that can cause an inducement. So comparing this to this, you can now see that this is a strong price move. You can nod your head and say yes, okay. There is involvement of big money in this trade. Okay, so this place has been violated, so you can take it off your chart. Okay, all right. So this is now your major low. Once this low gets taken, know that the bearish trend has resumed. Okay, know that the bearish trend has resumed. So basically, you want to look for a buy around here and buy to our target. The way is moving very fast now. It might never come down here again. It might never come down here again, and that's still fine. You will miss a lot of trades as a trader. You just have to accept it. Okay, you miss trades, you will lose, and the ones you get, you would also win. All right, so part of the business. So our new trade idea is that we want to see price coming down here for us to go long. I want to see price coming down here for us to go long. We want to see price coming down here for us to go long. Okay, so our first target will be the high, then this zone over here. Okay, I want to target this zone, but I won't take profit at this zone. I'll take profit before the zone. Okay, before the zone. So yes, I don't think it'll come down here. It looks very very strong. Even though around here now we might have something that may form a resistance. Okay, if I look deeper, I would mark it properly. But just from this, I can just say that around here now we might have a resistance, but we don't know for sure. Right? We don't know for sure. So hopefully we hit this resistance and come down, but it might just smash the resistance and keep going higher. So we'll be monitoring it. So these three pairs is what we'll be monitoring moving forward for the rest of the training. All right, just the three of them. We'll just be looking at it. What is happening? What can you do? So right now we don't have any trade yet. Okay, if Euro USD come down here, that will be our first trade. Okay, if Euro CHF come down here as well, and that trade idea. So as USD JPY. Okay. So yes, guys, that's basically all I have for today. If you have questions, ask before we close in the Lord and in happiness. So if you have questions, please hit me.
We have a question.
Yeah.
What is the question? Say something about trading news.
Okay.
Also, also ask what pairs do you trade?
Okay. What I trade is let me see. Okay. What I trade is um let me open my personal trading view. So the ones I trade is you can see my watch list here. You can see my watch lists. I have okay, I have some alerts. Let me see. Okay. What did I put alert for? I've forgotten. I don't trade BTC, but I just have a trading idea here, sure. You can see that it's working out quite fine. Okay. But I don't trade it. I just use it as uh um exercising my skills or whatever. Just making myself better or practice. Let's just use it as practice. The ones I trade, you can see them here, just three. Let me increase. Let me increase this. Okay, so it's too big. You can see them here: CHF JPY, GBP USD, and Euro AUD. Okay. The reason why I chose these pairs is that they don't correlate with each other. Okay, so these are six different currencies: Euro, Australian dollar, GBP, USD, Swiss franc, and JPY. Okay, so um, when I was when I was a trade, how do I put this? When I was a beginner, I usually trade anyhow. I just trade different currencies. Okay, so I can trade Euro USD, Euro AUD, Euro GB, Euro JPY, and the rest. Okay, but what you notice is that if you trade Euro USD, Euro JPY, Euro card, Euro everything, okay, you are basically trading very similar pairs. Okay, because all of them have Euro inside it, they are going to move similarly. They are going to move similarly. So if you check, let me say you check, this is Euro AUD chart. You can see it's bearish. Okay, if I check Euro JPY, there's a high likelihood that it will be bearish as well. Okay, okay, it's actually bullish. Probably Japanese yen is weak. Okay, it's quite bullish. But let me check on that one. Let's say Euro card, Euro card, Euro card. You can see it's bearish as well. So if I go to Euro USD, Euro USD, you can see it's bearish as well. Okay, so um if you trade currencies that have the same currency inside it, you are basically trading correlating pairs. So if you make a win in one currency, okay, that means you will make a win in all the other ones. But if you make a loss in one of them, you also make a loss in all of them. All right. So that's why it's dangerous to trade correlating currency pairs. So that's why I selected these three, just three of them. They are all different. None of them. You cannot say that one of them is correlating with the other one or whatever. All right. But it's okay to trade correlating pairs, but just try and keep it to one or two. Okay. So that means that some traders will trade like Euro USD and GBP USD. Those are correlating pairs because both of them have USD inside it. All right, but Euro and Pound, they are quite different currencies. So you can trade them together, but you have to be a little bit careful. Okay, you have to be a little bit careful. But don't go and trade Euro USD, GBP USD, and USD JPY. That would be a bad bet for you because all of them have USD inside it, and they will definitely correlate. So try and find another currency pair that maybe is a cross, all right, or a minor that doesn't have USD in it and doesn't have any of the other currencies inside it. So you will now look if you are trading Euro USD and GBP USD. Try and find another currency pair that doesn't have USD, Euro, or GBP inside it, so that the correlation will reduce. Okay, so or maybe it has just one of them. something like that. Sha. But this the one I selected, or the ones I selected here, they are totally different. So that's why I like my watch list. Just these three. Then I just use this BTC and BTC and ETH to just monitor the general crypto markets. Okay, I'm not involved in the crypto market for now. I'm not involved in it, even though I'm learning DeFi. Okay, that's DeFi is decentralized finance, but until I get good at it, I won't really put much effort into crypto. Okay, so, well, yeah, crypto is just to be watching the market. So basically use BTC, and so my next expectation for BTC is that BTC will take external liquidity here. So if you are a Bitcoin trader or you are a crypto trader, you can take advantage of this. I'm already in a sell here on TradingView. Sure. So yeah, that is what guided my selection of currency pairs. That's what guided my selection of currency pairs. All right. So correlation is something important that you need to know. I don't think it's on our course outline, but it's something important that you need to know. I'm actually buying CHF from here, but I don't know if this is. I don't know what's happening here. Okay. I'm hoping it will fly. I bought around this red area because I don't want it to leave me alone and fly. So that's not got into my main area, sure, but hopefully, let me see what happens. So yeah, those are my three pairs that I trade: CHF JPY, Euro AUD, and GBP USD, because they don't correlate with each other. And what was the second question? Sorry, I have flown very far. You said something about my trading rules. Okay, I said that my trading rules. Um, if the price doesn't play to my tune, I will be unlikely to uh, execute. All right. So now I'm not saying that you should not execute if the price doesn't go your way, because, but what I'm just looking now is that I'm looking at USD JPY, and I'm seeing this weak price move here. This higher high doesn't really look powerful to me. Okay, and we still have an imbalance here. That's why I'm still skeptical about buying it here compared to Euro CHF. Even though Euro CHF also has an imbalance here, but you can see that we mitigated the previous range. So this previous highs here, price sat on it. But on USD JPY, price has not sat on the previous highs. Okay, so I'm just wary about it. Okay, compared to Euro CHF, like I see that on Euro CHF, I've shifted my goalpost. My initial goalpost was probably around here. Okay, but now my new goalpost is up here because price has changed. So as a trader, you have to be like water. Whatever the price shows, you follow the price. Don't just stay rigid. Okay, you follow what price is doing and you act accordingly. So, but if price is doing somehow and doesn't look good in your eyes, or it doesn't look convincing to you, um, if you look at everything you've learned before, okay, you can see that this guy doesn't mitigate this place. Even if it keeps going higher, I'll just ignore the trade because I can make money there, but it doesn't matter to me because that will just be risking my money on something that is not high probability. So that's just it. So there's a difference between um uh flowing with the price, okay, flowing with the price and taking unnecessary risk. Okay, so this is the lesson I want you guys to learn between these two, this USD JPY and Euro CHF. So the difference between these two is that in this case we are following the price, we are flowing with what the market is giving us. Okay, but in this case now, if you enter this trade, you are basically jumping the gun and you are risking your money on something that might not give you what you're expecting. So you might go and buy, you might go and buy at this other block now, and price will now boom fall down to this zone because of this imbalance. So as long as everything doesn't add up, if everything doesn't add up, then just try and stay out. Okay, so once you're in the market, there's nothing you can do. You are now susceptible to loss. So the best time is to be out of the market or to be in profit. So um, that's basically it. You have to move with the price, but don't move stupidly. That's just basically the lesson. I don't know if you guys understand me, but I'm just trying to pass across this message as best as I can. So that there's a difference between this and this condition. And we'll be seeing more and more as we do more analysis on our charts. But yes, man, that's all I have to say, Sha. Any other question?
Okay, yeah. I'm just curious about after you mentioned crypto.
Yeah.
I'm just curious, and I know some persons trade crypto or would want to trade crypto.
Mm.
Seeing how volatile the crypto market is, and then sometimes you see price will just fly up or down
Yeah.
based off of what Elon Musk says or what somebody says.
Mhm.
Does price really follow this up and down charts like in a like in trading view charts? Does crypto obey that up and down movement?
Yes, crypto obeys
I don't know
everything.
if you get what I'm trying to
I
say.
understand what you're saying. Crypto obeys everything. All right. So on the forex chart now, you might see price going up, and everybody say, "Oh, the news, this and that." But if you are a technical analyst, you notice that you can already see those things on the chart most times. You can see a reason why that happened on the chart beforehand. There was this time I bought Dogecoin at one time. All right. I bought Dogecoin based on number one, hype, and number two, technical analysis. Okay, I bought it at a good support. All right, so I bought it at a good place. Sha. I basically got like 12x, like 12 times what I put in. All right, but then um, Elon Musk's talking about Dogecoin is just kind of something that made the move stronger. You understand? The move will still happen anyway, based on technical analysis and the people that are buying it. Okay, so um the hype around it also cause it to push higher because the more people buy something, the more it goes higher. And basically, technical analysis is just the analysis of price and trying to predict from the chart where people will buy or sell next. Okay, so all these things that you are seeing here is just basically a visual representation of what people are doing in the market. Okay, so people are buying here, people are buying here, people are buying here, but that's not basically what you're thinking. What you're thinking is just lines and candlesticks and all those things, but beneath everything is just people placing orders. Okay, so technical analysis works in the crypto market. Okay, so all these people talking about this or people saying that, I think it's just it's just like an excuse. All right, it's just an excuse for what is already going to happen. Those people talking about it, they probably bought it already. So Elon Musk might have bought the Bitcoin already. Okay, so they will now say, oh, um, buy Bitcoin as well. The amount of money he put into Bitcoin, it is already enough to move the price a little bit. So if you now ask other people to buy it, then there will be much more demand, and the more there is demand, the more the price will move higher. But basically, what I'm just trying to pass across is that crypto obeys technical analysis 100%. All right. I may not say the same thing for all these smaller coins that are all these degens, all these meme tokens, all these tiny Shiba Inu, Baby Dodge, all these all these meme coins. They may not obey anything, but for Bitcoin, all these established one, all right, Bitcoin, ETH, they obey technical analysis 100%. It doesn't matter what Elon Musk says. Have you encountered a time that Elon Musk said something about Dodge and nothing happened because people did not have faith in Dodge? All right. So he says there was one time he tweeted about Dodge, Dodge, blah blah blah, but nothing happened with Dodge because nobody bought it. Probably because nobody had faith in what he has to say about Dodge, or people just don't see Dodge as a smart investment. So it's basically what people want to buy that is going to move price. All right. So you can see here, you can see my tiny zone in this place. You can see this zone is basically a sponsor candle. If you move to the right, it's basically a sponsor candle. So you can see, you cannot tell me that Elon Musk spoke here. Okay, it's not Elon Musk that spoke here, it's just people that change the trend by selling. All right. So yes, crypto based technical analysis, probably not the smaller coins, but crypto is very profitable as a tool, but as a sorry, as a trader, right, you can trade crypto based on technical analysis and you would make profit as well. All right. It just depends on which market you want to choose, whether you want to trade the crypto market. If it's too volatile for you, you can stick to Forex market, or if you want something better, you can go to derive synthetic indices. All right. So everything, I believe everything obeys technical analysis at the end because technical analysis is the study of supply and demand, all right? And supply and demand is what moves price action, all right? So, yes, 100%. Crypto is volatile, but it still obeys technical analysis in the end. So, yeah, that's basically it. It obeys technical analysis. So you can, if you want to go to the crypto market, that like is a good option. I don't stop anybody from doing that. In fact, I will also be involved in the crypto market when I'm ready. Okay, when I've learnt or gathered greater understanding of several things. But if I'm just trading the crypto market, it's the same thing as trading forex. But I want to go deeper than that. I want to learn DeFi and all the deeper things about all those meme coins, everything about crypto. So crypto is very very vast. I can't learn everything. Okay, but I'm also learning or trying to learn blockchain developments, which is basically developing the structure that helps in the DeFi protocol. Okay, so developing cryptos, how all those things work. Sha. The blockchain is a very revolutionary technology. I believe that is going to last a long time. The crypto market is like the future. You understand? So I encourage everybody to look to get involved in one way or the other. Sha. Plug yourself in. You understand? So I'll definitely be involved in a greater capacity later on. But for now, I'm still just developing myself and trying to learn more about whatever is going on here. So yes, yeah, Bitcoin, ETH, BNB, all of them, all the established crypto that have enough volume, enough people buying and selling it, they all obey technical analysis. Yes, they all obey technical analysis. And it's the same analysis you're using to trade forex that is and trade crypto. In case you're wondering, the same analysis everywhere. Same analysis, same breakdown, same top down analysis, same everything. So yeah. Another question.
Okay, I have a last question.
Okay.
Ask me a question.
Okay, Stanley, go then. Christopher will now go next.
Huh?
Okay.
You go after him.
So
Okay, what
between
I want is there gonna be like a trading plan for us?
Trading plan.
Like the development, how to develop the trading plan and stuff like
Um,
that.
I don't usually give people trading plan. Okay, what I do is that I give you the structure that you need to follow. Right. So if you look through this thing now, okay, I can now tell you managing expectations, your risk to reward ratio, what you need in terms of blah 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 to be profitable. So what I teach is that I will teach you the basic concept on how it will be easiest for you to make it on time. All right. So I don't box people into a place now and say, okay, this is your trading plan. I just try and teach you the basic principles. So what will be your trading plan will be based on you as a person. This thing I taught you here today is a trading plan. Okay, it's a technical analysis trading plan, monthly and weekly buyers, daily charts, find the important points, find proper target on the daily charts, go to 4 hour chart, find your entry zones, refine them on lower time frame. This is a simple trading plan. Don't think it has to be some one complex brouhaha somewhere. All right, it's nothing complex. It's just a simple thing that you understand to a deep level. All right, it's just a simple thing that you understand to a deep level, deeper than what most other traders understand. Okay, so don't expect a trading plan to be something complex. Okay, so you can just your trading plan can is just basically based on you, what you are willing to do. You can decide that your trading plan is when an imbalance gets filled or always a sponsor can do or whatever. I don't want to box you guys into one thing. Okay, so at the end of the training, after you practice for like 1 or 2 months, you know what is convenient for you. Okay, you know what has given you success. You can see here I wrote about keeping a journal. Okay, so if you keep a journal based on maybe like 50 trades, you know that okay, I have the most success by trading an imbalance. I have the most success by um, trading a sponsor candle, etc. Okay, so a trading don't make people um, trick you into thinking that a trading plan is something complex. A trading plan is just a step-by-step process. Okay, trend on daily charts. Okay, target on daily charts. Um, entry area on 4-hour charts, and 15 minutes confirmation. That's a trading plan, right? So as long as you understand all these tiny, tiny things, imbalance, order block, where the price is, where the price may go, etc., you are good to go. There's nothing like any I don't know what you mean, Sha, but basically a trading plan is very simple to me. Just what you need to do to have a trade, have a target, and have a good way of managing your risk and your reward. Right? I would learn all those in this training, but I won't just give you a trading plan to follow. That is your creativity. I'll leave that to your creativity and your individuality. All right. So yes, I don't know if that answers your question, Shabo. That's all I have to say concerning that. Stanley, what was your question?
Okay, yeah. First of all, at this point now, do we need to backtest any strategy?
Yes,
That's the first question.
you need to
And then this, the second one, sorry, the second one is your teaching has shown that the trade is as simple as just doing top-down analysis
yeah,
and then knowing where your target will be and where to enter.
yeah,
And then every other thing you've taught along the way is just to know what to observe along the
yes,
lines
as going
of
up to down.
analysis.
Yeah,
uh But I've seen so many traders videos and stuff on YouTube, and then it has all sorts of trend lines and everything, moving average. So confusing, so frustrating to look
yeah,
at.
yeah,
That was why. Oh, I've always thought that trading is one very like rocket science or something.
yeah. Trade,
But then your class has shown that it's just as easy as just knowing where the market direction is, the bias
yeah,
and all that.
you notice
Then
that
that works.
all those times I usually post my chart, you see that almost nothing is on my chart, very very clean. All right, and you notice that
Yeah.
you still have a solid trade from it. So I don't usually like trading plan that are complex. Like I was checking out somebody's mentorship some time ago, and they were talking about Wyckoff, the Wyckoff lines, the schematics. I wanted to learn this, but I have the mentorship of the or the videos at least. I have it. I can learn it, but it's not going to just make my plan more complicated. What is simple? It's not better I just look for what is simple. Sponsor can do imbalance, sharp movement. All right. So all those simple things. You don't need something complex. When I just started trading, all I used is a trend line like this. Okay. I'll get a trend line like this, and on this trend line I'll look for a range. So this is my first range, or this can be a range, this can be a range, this can be a range. So let me assume that my range is here. Okay, let me see, my range will be from here to here. Now I'll just look for a movement into like 61.8% Fibonacci, and I'll now combine that with a supply zone or a resistance or a support. As long as I have these three, a resistance, Fibonacci movement into a supply zone, and a trend line is touching my trend line, I'll take that trade, and I was profitable. I made good money from this simple strategy. So this is proof that, in fact, this my current strategy is more complex than what I used to trade and make money with. Okay, it's just that this strategy now, it makes me understand all those manipulations back then that I did. I actually confused my brain. All right, I may have something that go above the trend line and continue like this, and I'll have already started buying that nonsense. You understand? So this strategy was very simple. I'll place like 10 trades in at the beginning of the week, and at the end of the week I'll have like 7 wins and 3 losses, or 6 wins and 3 losses. But the profit will be way bigger than the losses. So trading is not complex, guys. Try and avoid complex strategies. Try and avoid complex strategies with all your might. Make it simple, because if your strategy is complex at the beginning, once you are learning new stuff and adding on top of the complex stuff already, you are just going to paralyze yourself. All right. So me now, I have a simple strategy. So anything I can add on top of it, it will not make it much more complicated like that because it was already simple at the start. But if you have a complex thing, a complex strategy already, and you're not looking, there are so many moving parts. All right. You're not looking to add and that thing on top of it. You are going to lead yourself to something you do not intend to do in the first place. So yes, trading is very simple. Try your best to keep your strategy as simple as possible. Daily charts, 4 hour chart, 1 hour chart, 5 minute chart, imbalance, sponsor can do this or that, whatever it is. All right. It might be Fibonacci, discount and premium, whatever it is that you want to inculcate into your trading plan. But make sure it doesn't have too many moving parts. Just make it very simple. And yes, your first question, you say, do I have to backtest? Yes, you need to backtest. Backtest everything we've learned so far. Backtest the sponsor candle, backtest the imbalances, backtest the stop runs, failure swings, equal highs and lows, all these things, mitigation block. Basically, what it's not that these things don't work. All right. The point of backtesting is not that okay, I want to see whether it's not work or blah blah blah. It works. Okay, what you want to find out by backtesting is to make your eyes to be used to it. Okay, so if you see something 100 times, it's different from when you see it. You've seen it once or twice from my class. Okay, if you finish my class and you just go and start trading, yes, you will start getting experience, but your experience will be slow because you've not seen it that many times. But if you go and backtest, use one whole weekend. All right, use one whole weekend. You spend like 10 hours or let's say 5 hours. Okay, looking at just the sponsor candle and you find like 100 sponsor candles in those 10 hours, you'll notice that once you see a sponsor candle, your eyes will just go there, ping, 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 ping. It's just like instant, right? But most times, even me, I don't have time to backtest sometimes. Most times, I don't have time to backtest, but I notice that once I backtest, it's usually, I'm always smiling because you just be seeing so many enlightening stuff on the chart, all right? You just be seeing so many enlightening stuff. And when you practice it, it will be very, very, to make you happy, basically. Understand? So backtesting is important because you are trying to train your eyes to see certain things in the market. Okay, so you want to go from being a novice to being a little bit experienced by looking at what has happened in the past. So you want to know, should I use a mitigation block or a sponsor candle in this case? Something like that. You just want to see more. You just want to be intimate with the chart, all right? So you want to see how the price move between all these things you are learning. Okay. So this imbalance here, should I expect the breaker block or the mitigation block that's inside here to respect price, or should I expect the sponsor candle here to respect price? So these are the tiny, tiny questions that you should be looking to answer for yourself by backtesting. Okay. So yes, you absolutely need to backtest, and yes, your strategy should be very, very simple. Don't try and do your best, like just do your best to avoid complex stuff. Okay, you might learn complex stuff, but remember the basics deep down. Once you forget the basics, you start losing. And it has happened to me before. I forgot all the basic things, and I will now watch other traders using the basic stuff. I would be dying inside, like, oh, why did I just leave all this basic stuff and start chasing complex strategy? Okay, so just try and stick to the basic stuff, all right? If you stray away from the basic principles, you would have to come back later and you will not be happy with yourself, basically. So keep your strategy very simple, and if you're adding anything to it, just add something that will probably make your stop loss smaller, all right? But if your strategy is complex from the beginning, it will be hard for you to add anything to it. It will be hard for you to learn any new thing and incorporate it to your trading. So trading is very simple, but it's not easy, all right? And you will learn the part about not being easy when you start using your money to trade or using somebody else's money to trade, all right? So trading is simple. Keep your strategy simple, but it might not be easy because you are dealing with money here, all right? So if you lose your money, you might not eat. So that's the part about it being tough. But the tough part should not be your technical analysis. Technical analysis should be very, very simple. Don't make it hard for yourself, please. All right. So yeah, that's it. Backtest and keep your strategy simple. Yeah. Any other thing? Or we just close the day. All right, I'll just take it out. We don't have any questions. In fact, I don't want any questions anymore. Time is fast spent. We've spent more than almost 1 hour 30 minutes in this class. So yeah, I'll end the recording here. Good night, guys, and have a good week moving forward from today.
Thank you.
Yeah.